Hi, welcome to our profitable trading setups. This time we're talking about the Deckchair Trader trending strategy. What we're going to talk about today, to give you an overview, is the recent EURUSD setup, starting in about April 2017, where the euro was very strong, very bullish in an uptrend against the US dollar. So let's work and look at that one and see how we would have got into that, what the setup was, and how it could have produced 150% return in just over the 4 months. So for example, if we started with our 10k pot, so we had a 10k account, I'm using pounds here, but it could be any currency, at a maximum of 5% risk per trade, which is quite aggressive. And we closed the trades out in August 2017 after just over 4 months. We look at the account, we find that it's closing at 25,000. In pure cash terms, that's a 15k profit or 150% return in 4 months, just over. So let's look at the strategy we use, which is based on the trending strategy. So trending strategies tend to be of a longer time frame. This one's over 4 months. We're looking to get into the trade a correction so that the trend starts to reverse. And as soon as that bounce happens, either going from a downtrend to an uptrend or an uptrend to a downtrend, we're ready to pounce. If we look at that pair a little closer, so this is the EURUSD, we're looking at April 2017, and we get the little heads up. We see this little blue bar here saying we've been going down for a while, but now we've bounced and we're going to come back up. So just be aware this could be potentially a trade for us to get in on. So secondly, we're looking for the oscillator to confirm this. Now the oscillator is the bottom window, and we're looking for the blue and the dotted line to cross over, and you can definitely see it's coming back up and crossing the zero line. So we're getting a confirmation that this is a trend that's going to start. So we really should be getting in at this point. Now we can wait for the little blue, if you can see it, the little blue indicator here, which is saying there is a trend change. So from being bearish, we're now into a bullish trend. So we could have got in a little bit later just to be on the safe side. So the trend's reversing. We're in an uptrend now, very bullish. And then we place our buy trade. Okay, at this instance, we placed it at the earlier confirmation. We could have waited a bit longer, as I say, a few days. And got the official trend change indicator. So we need to work out what sort of trade size we're going to place here, because we found the trade that we're interested in. How much are we going to put on this trade? What's our trade size going to be? So we have a 10k trading pot. Our account balance is standing at 10k, for example. Now that could be in pounds, dollars, euros. It doesn't really matter. In fact, the way the pound's going at the moment, we're pretty close to the dollar and the euro anyway. But it doesn't really matter. We're talking relative values here. So I'm going to assume, just for simplicity, that we're GBP, British pound. That is my trading currency. We're going to put 5% risk per trade. Now that's quite aggressive. Most people will talk about a 1 to 3%. We're going for 5% only because with a 10k pot we need to grow that pretty quickly, and it could take a long time. So we're going to kick up the percentage to 5%. So what we're saying is that 5% of our 10k pot we're going to place per trade, which means we're going to put a maximum of £500. So we're prepared to lose, if this trade goes against us, £500. Okay, so that's the monetary amount we're prepared to lose. What we need to do is convert that into a pip amount, so we know where to place our stop loss, just in case, as I say, things don't work out for us. Now, I tend to use about 250 pip stop loss on this type of trending, because it needs a bit of space to breathe as it sort of moves up and down. And trends are never in a straight line. They go up, they go down, they go up, they go down, but they tend to move in that direction, of course. So we're looking for a uptrend, but I'm giving it a bit of latitude to move 250 pips. Now, there are other techniques where you can look for support and resistance lines to place your stop losses, but we're only using this as an emergency stop loss. A real exit point is when the candlesticks move below our indicator. That's when we choose manually to close the trades. So this is really a belt and braces, just in case I'm away, can't get to my desk to trade. This will kick in should the worst happen. So you should always really trade with a stop loss, even if you don't intend to trade with it. It just peace of mind. So £500 was my 5%. I'm prepared to go up to 250 pips, so really we're looking at £2 a pip. So when I place my trade, I'm looking to put on a MetaTrader it will say it's in lots, so I'll be putting in 2 lots, although strictly speaking they're not full lots. So we need to then work out when are we going to exit the trade. Assuming all's going well, at some stage the trend will run out of steam. And as they say, the trend is your friend until it turns, and it will be turning at some stage, and we need to make a decision as to when that will be and what we're going to do. So there are 3 points that I'm looking at as to when I get out. The obvious one, the first one, the main one, is when the close of a candle is less than my white dotted line of the indicator, which you'll see when we run the trade from beginning to end. So that's giving us, and it's a sort of a kind of virtual stop loss, moving stop loss. The real stop loss, which is my backup one, is sitting 250 pips below. Okay, now I'm hoping it won't get that far, because if it is, really the trend's starting to turn, I would imagine, by that time. Or the trend reverses. So if we get a trend reversal signal, then we need to get out as well, because it's definitely moved against us. Now I'm hoping by the time any of these happen, we're well into profit. And you can never really time the top or the bottom of trends. So be prepared that when you get to the end, you're going to have trades in play that may lose you money. But of course the other trades that you've been placing on the way up or the way down, of course, more than compensate and cover those losses at the end. So I can now run my setup, and we recorded that on a separate video which we're going to run now, so you can see the effect of what happens when we place the trade and run it through to the end of August. Hi guys, this is Tim Titchmarsh, Deckchair Trader. Today we're looking at our trading strategy to trade the trend. Trend is your friend, and we're going to show you how we do that and maximize the returns by using pyramiding on our trades. So let's first talk about our pot. We have a 10k pot, and we're going to use 5% maximum per trade with a 250 pip stop loss. So that gives us 2 lots, or £2 per pip, as I'm using my spread betting account to trade each of my trades. So if the trend continues, we just keep buying up or down depending on which way the trend is going. The entry level, or the entry position for our trend, is when the trend we get a trend correction, i.e. this blue line here appears. When we bounce and come off that, and the oscillator below is crossing over and going in our direction, then we get in with our initial trade. Each time then my indicator gives me a 2 or a 3, I'm buying again if it's going up, and or selling if we're going down, and to maximize that and capture those pullbacks in the trend. Now we need to think about our exit strategy, because it's great while the trend is going up, for example, but we need to know when it's time to get out. So there are three checks that we've got. First one is our backup stop loss of 250 pips. That will be trailing each of the trades as I put them on. That's more of a fallback position, because really I'm not going to rely on my stop loss. I'm going to rely on manually closing my trades when the bar close is below this white line here. That is my signal to get out. That's of course on an uptrend, and it's the opposite if we're trending in a downward direction. Also, the third test that we do is if the trend changes direction, and we'll see a 1 appear on our indicator saying, hey, time to get out. So that could be an alternative close. So we're going to run through and see how we go. We're going to start in probably March, April 2017 and run up to date, which is sort of the end of August, beginning of September, or if any of those close signals come due, then we'll manually close the trades out. Where we go. So I'm going to do this nice and slowly, and I'm going to buy, remember, when we get that trend correction as initial buy if the trend's going up, and when we get a 2 or 3 appear in our indicator, means buy again. Okay, so we've got the correction. Now we're looking for the, there it goes, the oscillator is now confirmed by this crossover here, and we have a 3, so I'm buying again. We're not anywhere near our stop loss. We're not above, or sorry, below our white line with our close of the period, and we're on daily periods, as you can see from the chart. I have a 2 and a 3, so we're buying again, and we're still going up, so this is all good. Bit of sideways movement there. Oh, another 3, so again, let's get in with a buy. Now, okay, move down close, but not it's not breaking our dotted line with the close, so we can keep the trades running. So we're only in July, and we're still moving in an upward trend. A few 3s there, which are breakouts. So we're just pyramiding our trades as we go up, which is very nice indeed. Now we're coming close to the line, so nearly broke it. I'm going to stop this at the end of August if nothing much more happens. We're in a bit of a sideways move here. Yeah, let's close those off. Okay, so I've now closed those off. Let's see what we've got. If we look in our results window, we can see the trades have all closed off at the end of August. So we started with 10k, and they all close at the same time, so there's no closing of trades during the term. And so from 10 we went to 12, 14, 15, right up until the end of August, where we closed out at 25,500. So started with 10, ended with 25,000, 25,500. Very nice, thank you, in just over 4 months. So that is our Deckchair Trader trending algorithm in play. Hope you liked it, and see you again soon. Okay, so hopefully that made sense. You saw what's possible with the right algorithm, the right strategy, and the right trainer. So if you need to know and like to know more, head over to deckchairtrader.com. Until the next time, happy trading.